Gathered to share ideas. We ask for your presence to be with us. So at the end, every troubled heart will be calmed and we will sing together, "It is well with us." This and many we've prayed through Christ our Lord. Amen.
Okay, thank you so much, Emma. All right, so just to give everyone an idea of how the meeting will go, we'll be online until 4 p.m. So that's when the meeting ends. And we'll try as much as possible to stick to that time. We will have Kojo Adaimensa, who is the Group CEO of Databank. He will come on, give a few remarks, welcome everybody as well. And then from there, we will turn it over to SEC because we do have 2 representatives from the Securities and Exchange Commission online as well. They will also explain the whole mark-to-market initiative that a lot of people have been hearing about, talking about, feeling the effects of. So they'll talk about it, explain why, and this was needed at this time. Then once we get through that, we will open it up to questions from those who are online. Now, as it relates to questions, you can either use the Q&A feature or the chat feature. I recommend the Q&A, but you're free to use either one. What will happen is we will do our best to answer as many questions as possible in the next 2 hours. But as you put your questions in the Q&A, we also have a number of people, fund managers, a number of other Databank staff who will try and answer questions that come up in the Q&A and chat as well, just so we try and answer as many questions as possible. So that is the expectation. And then once we get close to 4, we'll kind of close it out. Now, I know that some people are here and not everyone is happy, but the whole goal of today's session really is to acknowledge how everybody feels, the struggle that is happening, and just find a way to give you guys a voice, let you ask your questions, and we'll try and respond to them as much as possible. I will ask that at all times, even in the chat when you're typing in your questions, try and remain calm and use nice words as much as is possible, because we are here to try and help you in the best way that we can. So without further ado, I will turn it over to Kojo Adaimensa, who is the Group CEO of Databank. Listening in the background as well, we have Debbie Akote, Arma Akote. She is the Chief Investment Officer for Databank Asset Management Services. We have Edna Ahunu, who is the fund manager for M Fund specifically. Then on the SEC side, we have Anthony Degbato and Naomi Simpson. Both of them are senior managers at SEC. So those are the people that you will be hearing from today. So let me turn it over to Kojo now, and he will talk, and then we'll take it from there. Thank you.
Thank you very much, Gillian, and good afternoon to everybody on the call. I'd like to really thank you all for coming onto the call. I expect this to be a very interactive session, and that we will all go away at least with some or most of our questions answered. At Databank, we believed that following the implementation of the policy last week and getting the feedback following that, it was important that we actually come out and meet our clients and talk to our clients directly. I know a lot of you have been to our branches and been to our social media channels and asked some of the questions, but I thought it would be important that you hear from me, myself, and the team, and try to educate as much as we can, because I think this is part of educating the investing public. I'm going to start off by reading the notice that we sent out to clients actually before we implemented. I acknowledge that not everybody received the notice. I acknowledge that some people even think that we never sent out anything, but we did. So I'll start off by reading the notice that we sent out to all clients so that we put things into perspective. And then from there, I'll try and proactively answer a couple of questions. It's your day, so I will not try and answer all the questions that I've received immediately, but I'll open it up to get your questions. So I'll kick off by sending out the update that we sent, and by reading out the update we sent, and that was on November 21, 2022. To comply with the directive by the Securities and Exchange Commission, the SEC, on October 20, 2022, to market operators numbered SEC/DIR/002/10/2022, and a notice to the general public numbered SEC/PN/005/11/2022, we would like to update you on the changes that we will be making to comply with the impact on our mutual fund clients. An excerpt from the SEC notice to the public regarding the collective investment scheme said, this public notice is to alert the investing and general public that the Securities and Exchange Commission, SEC, has directed all market operators to use the mark-to-market valuation method in the valuation of investment assets, securities, and portfolios in the securities sector. The directive was issued on Thursday, 20th October 2022, with reference number SEC/DIR/002/10/2022 to provide consistency in the valuation of assets and portfolios in the securities industry, ensure that the portfolios reflect market values, as well as protect investors, especially of collective investment schemes. The directive on the mark-to-market valuation method is available on the SEC website under Guidelines and Directives, www.sec.gov.gh/directives and guidelines. The meaning of mark-to-market. Mark-to-market is a valuation approach where the value of a security in a portfolio reflects its current market price and not the purchase price or face value. It therefore indicates how much you would receive if you sold the security on the market today. A portfolio that is marking to market could see its price go up and down, i.e., experience volatility based on market conditions. For example, a client bought 50 shares in a mutual fund at a share price of 2 cedis, translating into 100 cedi value. If the client decides to withdraw today, the client would receive an amount based on the share price for the day and not the initial price the client paid. If the current share price is 1 cedi 50, the client would get 75 cedis. If the price, on the other hand, had rather increased to 3 cedis, the client would have gotten 150 cedis. The impact on your investments at Databank. Effective immediately, that was at the time, Databank will be taking the following steps in compliance with the directive. Withdrawals. All withdrawals will be calculated and processed using the mark-to-market price. Deposits. All new deposits will be invested at the current market price. And at this point in time, I would like to inform clients that currently we have waived the front load on deposits. Account balances. Going forward, you'll be provided with 2 account balances that will reflect the following. The amortized value. This reflects the current value of your investments in the fund at face value. Market value. This reflects the current value of your investments in the fund calculated at mark-to-market value should you decide to redeem your funds. Note that there was a reduction in Friday's price for M Fund. That was at the time. This was due to the need to sell securities at a discount in order to meet withdrawal requests. We are working to make amortized and mark-to-market values available on all our channels as quickly as possible. However, in the event that you are using one of our withdrawal channels that does not reflect both prices, you can contact us by phone or email to get the details. We recognize that we are in very challenging times, the likes of which Ghana's capital market has not encountered before. We thank you for your patience and support and encourage you to remain calm and stay invested. Databank remains committed to protecting your investments and will continue to act in your best interest at all times. Please contact us at 0302-610-610 or at info@databankgroup.com with any questions. So at this point in time, I would like to also just go into a couple of questions that came through, which I thought was quite important to proactively address. It doesn't mean you can't ask the same question again for further clarity. So one question that keeps coming up is, why is Databank taking money out of my account? Please note that we have not taken money out of your account. Indeed, if you observe, you will see that the number of units you have remain the same. If you are able to stay invested and wait for the market to recover, your amortized value is what remains, and it will be far better than if you choose to withdraw now. Another question that really keeps coming is, somebody said, my problem is, if someone is withdrawing, why is it not affecting that person, but someone who is also still keeping their money in there? Now, the first thing to keep in mind is that each fund normally keeps a certain amount of cash on hand to pay withdrawal requests. But once that is exhausted, the fund manager has to now start selling off existing bonds before they mature to raise cash to pay. Now, imagine the fund has used up all its cash reserves, which is actually the case right now. And there are still a lot of withdrawal requests coming in, largely because people are panicking. Let's also say the withdrawals that need to be paid up add to, say, 5 million. So the fund manager has to sell one or more bonds to pay those requests. However, when the fund manager looks at the portfolio and the smallest bond that was purchased on your behalf is valued at 30 million, if it's held to maturity, while it is possible for the fund manager to sell just the 5 million of the whole 30 million bond under the current market conditions, the fund manager may actually need to sell about 10 million to raise the 5 million. This means he will get cash of 5 million, with the other 5 million being a loss or an expense to the entire fund, including those existing. So the entire fund will then have to bear that loss. It also happens that because people are panicking, we are having to do a lot more sales to have liquidity to pay people. It means having to incur these losses. So implementing mark-to-market means that everyone, including those remaining and those exiting, will bear that loss. But those exiting actually will bear a bigger loss because then you are also exiting at market. Remaining calm, staying invested, will ensure that we are not compelled to sell those securities at this time. Instead, we can actually hold on until maturity, upon which we will realize the full value and be able to even maybe reinvest in the higher interest bearing short-term securities that are on the market. So it's actually in the best interest of all of us collectively to give the market some time to recover so that we can see bond prices rise again. I will now share a testimony from one of our clients. The client has given us permission, but without really disclosing the name, just to share the testimony. And this one is not coming from Databank, it's coming from one of us as clients. I'll share that, and then at that point in time, I'll invite the SCC. So the client says, and I'm reading verbatim, not edited, nothing. Hey guys, I don't work for Databank. I'm just an investor or customer, just like the rest of us here. I didn't want to add my voice, but I think I need to. My humble appeal to us is to be calm. The times in which we are now will surely pass, so let's not take hasty decisions, please. This mark-to-market valuation we're experiencing right now is as a result of market downturns. What it means is that bond prices have dropped significantly. Our monies we invest do not sit in the office of Databank, but rather they use it to purchase bonds and other instruments so as to derive returns for us. And we have been seeing that over the years. What is happening now is because the prices on the market now is very low because of current economic situation and hyperinflation. And if you place a withdrawal request at a time the bond is not matured, it will mean they will have to sell the bond prematurely at the prevailing low prices, which will render them some losses, which will in turn go against you, the investor. Mark to market simply means your investments have been pegged against the current market prices, and you only realize that loss if you opt to withdraw your money. If you don't withdraw and keep calm, the market will correct itself gradually and you win. Let's be patient, and this time will also pass and go. This is even the time to invest, because how much you could buy an investment product formerly have been reduced drastically. So you now pay less for more instead of paying more for less at first. If you understand the system, you will realize we are in great investment opportunity times. Thank you very much. So Jillian, at this point in time, I think I'll turn it over to you to invite our other guests.
Thanks, Kojo. Okay, so we will take, I'd like to introduce Anthony and Naomi. Anthony, I'm not sure which of you will speak first. Both of you can come on camera. And then I will hand it over to you to also talk to those who are online.
Okay, good afternoon, Gillian and Kojo, and the rest of the investors.
You can turn on your video, Anthony.
You want me to share my
Yes,
video?
please. I would like both you and Naomi
I wouldn't like to share my video, however.
Oh, they need to see your faces, at least so they know who is talking. So please go ahead.
Okay. All right, so this is Anthony from the SCC. Okay, so good afternoon once again. So our Director General, Reverend Ogbami Tete, has actually accepted that we sit in this meeting because he believes in educating investors in times like this. As a result, he himself and other Deputy Director Generals actually have been on radio, on TV, and trying to explain the mark-to-market directive. And so this afternoon, we believe that investors would be educated in terms of the directive that was issued by the Securities and Exchange Commission. So I'll briefly talk about the recent development in the market. I think Kojo has already done a good job at that in terms of giving a lot of examples. But I think that instead of reading the directive verbatim, I would like to take them and take the salient points, areas that are quite relevant for investors. And we will try as much as possible to break it down in simple terms, simple language for investors to understand. Now, so what happened, or the recent development in the market? So the SEC has taken note of the high interest rate regime that we had in Ghana, and the adverse effects. I think Kojo mentioned that the interest rates and inflation, all these affect investment vehicles, but investment such as bonds. I try as much as possible not to use technical terms. Now, so such as bonds. And then the effect that actually had also on redemption request. That also have an effect on how you should match redemption versus redemption request versus sale of securities. So these dynamics actually were at play. So the SEC tried to understand further. So the SEC did a survey to understand and to ask. These things were at play. Now, I would like to give a short example, just as to further explain the example that was given by Kojo in the earlier discussion. Now, let's say that I and Kojo, we have invested 100,000 each in M Fund. Now, M Fund is required by law to keep cash. So let's assume that M Fund has kept a cash of 50,000 cedis towards a redemption request or withdrawal request by me or from Kojo. Now, so over the years, the fund has operated in this manner and there were no issues. So that I would ask for 10,000 withdrawal, or Kojo would ask for 20,000. All these would be paid out of the 50,000 cash that the M Fund is supposed to keep. And then M Fund would invest the remaining. Let's assume, again, this is just for an example. Let's assume that M Fund has invested the remaining 150,000 cedis in 2-year government of Ghana bonds. Now, as a result of panic or the panic in the system, let's assume again that Kojo wants to take all his 100,000 cedis. Now, so it's only cash that is available, 50,000. Now, we need to probably find additional money somewhere to add to the 50,000 that is kept by the fund to be able to make 100,000 available to Kojo. So now, what that means is that the fund would have to go and sell securities to sell the bonds. And given the market condition, we are all saying that bond prices are low, what it means is that you can only sell below par, below the value of the bond. Let's assume again, before you get your 50,000 and add to the cash, you have to sell more, right? You have to sell, let's say we are selling 80,000 to be able to generate 50,000 for Kojo. So we've sold 80,000 out of the 150. Now, what it means again is that Kojo would take 50,000 plus the cash, making 100,000 and away. And then when I would want to redeem, I have only available 70,000. And so that is the dynamics. In simple terms, that is the dynamics at play. Now, the SEC realized that no, it has to be fair. Investors would have to be treated fairly. Everybody should be treated. So then I would now come to the directive. So that will bring us to the preamble. So that I'll read that out to you. So the Securities and Exchange Commission, hereafter referred to as the SEC, is the statutory body mandated by the Securities Industry Act 2016, Act 929, as amended by the Securities Industry Amendment Act 2021, Act 1062, hereafter referred to as the Act. Now, to promote the orderly growth and the development of an efficient, fair, and transparent securities market in which investors and the integrity of the market are protected. I repeat that. The mandate of the Commission is to protect the orderly growth and development of an efficient, fair, and transparent securities market in which investors and the integrity of the market are protected. And the SEC also has a mandate to maintain surveillance over activities in securities to ensure orderly, fair, and equitable dealings in securities and to protect the integrity of the market in accordance with Section 2 and 3 of the Act. So mainly, this is the reason why the SEC had to come up with a directive. It is as a result of making sure that all investors are treated fairly. Those who will want to exit would exit at fair prices, and those who will stay in are staying in at fair prices. So, of course, that is the basis upon which the SEC came out with the directive. So, I want to make clear again also that the mark-to-market or the application of the use of fair value through comprehensive income, it's not a new valuation method. The market, sometimes the market is already, so if you are using, if you have a portfolio that is made up of shares and then Government of Ghana bonds, of course, shares, we use the mark-to-market valuation. So, but for M-Fund, which is specific to this discussion, we have not used that in the past because the values are not too different when you are selling in the secondary market. When it's a secondary market, is a market where you sell the bonds before their maturity dates. Okay. Now I'm trying to explain further. Now, so then the directive was issued, as alluded to by Kojo, on the 20th of October 2022. And then the SEC went ahead to say that the prices for the valuation should be obtained from the Ghana fixed income market. So the fixed income market, there's a prevailing price for almost all the traded bonds. So if you are selling the bonds before their maturity, there's a market for it and there's a price for it. Okay. Now, so then I would talk about the objective. Kojo mentioned that earlier, but I think I would just say that again. The objective of the directive is to provide consistency so that all market operators, such as Databank, EDC, and all the others, would also be using the same valuation method in the securities industry, and also to ensure that the portfolio also reflects market values, as well as to protect every investor. So that is the reason for issuing the directive. Now, the commencement of the directive is also stated by Kojo earlier on, that the directive issued pursuant to Section 23157, 197, and 209 of the Act as amended, and shall take immediate effect because of the issues that I have explained right now. It needed to take immediate effect so that investors can be protected. Again, I think that Kojo already mentioned that it is not a good time to sell bonds. These bonds are the underlying assets of the fund. Okay, so if you request for more or withdrawals go up more than the cash they are required by law to keep, they are likely to sell the bonds before to make those cash available. So if you sell the bonds, of course, you are likely to sell at a lower price as opposed to if you wait for those bonds to mature. So these are the dynamics in the marketplace. Thank you. If there's any question, we could respond. We could respond to that. Thank you.
Thank you so much, Anthony. Those are some very good explanations, and I hope it has helped to make it a little bit clearer for everyone. So there are a lot of questions, and I'm going to start going through them. And maybe the first one, Anthony, I'll give to you, and then some of them are Databank specific. So I'll bring Kojo in. So the first question in the chat is, what is the relationship between mark to market and the haircut? So Anthony, you can go ahead and respond.
Okay, so here we are talking about two different things. So the mark to market is to show if you are selling the bonds or you are selling the bonds today before their maturity, is you are measuring how much you can get from the bonds if you sell it today. Let's say the bond is maturing in a year's time. So how much are you likely to get? So that is the sale value, okay, assuming the sale value today. Now, again, if you are looking at haircut is where you are doing a debt restructuring, okay? So you are shaving off, okay? I will say that, well, I have promised that I will pay you interest of 20%. Okay, as at now, I am not able to pay 20%. I can only pay you 10%. So of course, that is a haircut. So in simple terms, that is the difference. There's completely, there are two different terminologies. So we cannot also say that mark-to-market valuation is equivalent to haircuts. No, not at all. Not at all.
Answer. Okay, thank you so much, Anthony. All right, the next question is, does this affect treasury bills? The answer is no. It only relates to collective investment schemes. So depending on the company you invest with, that may either be a mutual fund like M Fund or a unit trust that some other companies have. The next question is, the client says, you said our monies have not been deducted, but I have a reduction in my amortized value. It's always going down. So I'll turn that one over to Kojo. And okay, answer that, then we'll do that.
Yes, so what I think I tried to allude to was that if you look at the number of units you hold, maybe in the past we haven't been very cognizant of the value or the number of units we hold within our portfolio. But if you look at the number of units you have, you see the number of units has not gone down. It's rather the price that has gone down. Now, yes, the amortized price has also experienced reduction again because of the sale that we are being forced to sell to be able to meet redemption requests. Now, when we do a full sale of a bond and we sell it at a loss, that loss has to be absorbed first by the full fund before the person who is now specifically withdrawing. We can then apply what the market value is for the withdrawal. So you will be experiencing reduction in the amortized value if we are having to sell bonds at a loss that we are running through the entire portfolio. But always take a note that your units remain the same. And once your units remain the same, that should tell you we have not intentionally deducted anything, Julian.
All right, thank you. So the next question is, I'll leave you to answer this one. If I'm taking 10,000 CDs from my account, how long will it take?
So it's a question we keep getting, but let's think about it this way. Now we have an underlying asset. It's a bond. We've run out of the cash that Anthony had said that by law we are supposed to put some cash aside to meet that withdrawal. So if this time the cash has run out and we now have to go to the market to go and try and sell, it means that we are holding something, you are in the market, and you need somebody who is also willing to buy, and willing to buy even at the price that you're also wanting to sell. So there you have negotiations going on. So the times differ depending on when you went to the market, whether you had a willing buyer and the price at which this willing buyer was willing to take the bond off you. I mean, it's like going, having something that you want to sell in the market. You go to the market, you can't tell when maybe you have a calculator you want to sell. You can't tell when you'll be able to sell it. It's there. You try and sell and sell and sell. But since we started experiencing these steep discounts, we've been seeing anything from a week up to 2 weeks before we are able to sell to repay the withdrawal request. Sometimes when the amounts are really, really huge too, then it even takes a bit longer.
Okay. All right. So the next question is, why should my principal be deducted by your company? At least if you are not giving me any interest, you should give me my principal. We don't even know when the market will recover. How can I invest 90,000 and you tell me you will give me 70,000?
So I also get a lot of that. Let's think about it this way. And somebody asked if it affects treasury bills or not, but I'll try and do this illustration with a treasury bill situation. So let's assume that earlier in the year, you went in to buy a 1-year bond, and that 1-year bond face value was 100,000. Under normal circumstances, with the interest rate, after 1 year, if it is matured, you will be getting, say, 110,000. However, sometime in the year, say August or even July, you realize that you really, really needed money. When you go to wherever you bought that treasury bill from, that had originally a face value of 100, and then you were expecting 110 at maturity. It's possible that the prices have depressed so much that if you decide that you want to pull out the money, where you bought the bill, they'll tell you that the value now is at 70. It is possible such that the 100 even you had, because you didn't wait for maturity, has dropped below. And that is the situation we are experiencing right now. So now bring it to the mutual fund situation. Even though it's collective, everybody brings a bit here, a bit there, a bit there, a bit there. Now, because of timing and because you are demanding such that we now have to go into the market to go and sell to pay you, you are forcing us literally to sell the bond before maturity, before we even get the return that we were expecting. So when that happens, we'll have no choice but to pass it through the fund, and then it will impact you same as you say your principal. But in technical terms with mutual funds, because you can buy 50 CDs today, tomorrow you come and add 100, another day you add 20. That principal interest concept is not as black and white as I explained with the treasury bill situation. But if you understand it in the direct treasury bill where you bought face value 100 thinking that you have 110, but before maturity, you are going for your money and the prices have depressed so much, it's possible that you will get less than what you even initially invested.
All right. Thank you, Kojo. So There's a question about how long will it take for what you have already invested to mature. With the mutual funds, there is no maturity date, so it is up to you how long you want to keep it. At that point, when you decide that you want to come out of the fund, then you will be shown the two balances, the amortized balance and then the market balance. And then you'll have to make the choice whether you are comfortable leaving at the market value or you prefer to stay and wait for the money to come up. There's another question about if I make a withdrawal request today, which price will be used for the valuation? Is it the current price at the date of request or the current price at the date the withdrawal will be ready? The answer is at the date of the request. So if you send in your withdrawal request today, at the end of today, when we calculate the price, that is the price that will be used. Not even if we pay it a week from now, we will still use today's price in calculating your request. Anthony, I will put the next question to you. And this question says, what is the guarantee the market will not get worse? Is it not safer to keep your money instead?
That's an interesting question. That's quite interesting. Yeah, I think that nobody knows tomorrow. I think that as we have our lives today, we do not know what happens to us tomorrow. So it will be difficult to tell what happens tomorrow. However, as an investor, you are always anticipating that you want to make some return. So of course, you want to do some investment. We just have to be positive. I mean, if you say tomorrow will not exist, so let me dissipate all I have today and tomorrow comes, what happens to us? So of course, you know, we need to weigh all these and still stay invested. I can give a typical example about myself. I hold government bonds myself. Okay, I know at this point it is not a time for me to sell in the secondary market. Of course, if I sell, I would bear the brunt of a discount. Okay, so it is not a time to sell. So I will wait till it matures. And the whole idea is that once we have we have maturities, I mean, average maturities of these funds coming to the end, the expectation is that we will not see a gap between the mark-to-market price versus the amortized price. So I think not to deviate from the main question, let's stay invested. Tomorrow would come, we would be the fund managers. I think the fund managers will be able to turn things around in spite of whatever situation there is. They should be able to manage the funds for you. Another point I want to add is that cashing out and holding it comes with risk as well, okay? We do not know what happens. Maybe by cashing it out, you might not even get home. Someone might take these monies from you. It can also, so I typically give these examples to my colleagues. So there's risk everywhere, but I think that market comes down, it goes up generally. That's what we know. So we believe that the effect would come, this what we are experiencing currently would come to an end, and then we can all enjoy the benefit of the returns. Thank you.
All right, thanks, Anthony. Don't go yet. I will, just since you're up, I'll give you a few that are directed at you. So one person says, SEC did not do its work well with the information shared. They should have educated the investor community prior to the implementation of this policy. Now we are all being affected by the sale of bonds. And so the question is, why didn't SEC?
Okay.
Go ahead.
Okay, so well, I think we are entitled to our opinion. I would say that, well, the SEC did the best it could in this regard, trying to do a survey to understand the dynamics and also to ask the market. In all these, the SEC is in to protect investors, those going out and those staying in. So ultimately, that is the mandate of the commission. So I think that, again, let us also bear in mind that the Director General himself has been on radio, has been on TV, trying to explain the issues, trying to educate investors. And I have been on radio, I've been on, so the Deputy Director General was also, and the market operators were on radio trying to educate investors in times like this. I think that we have done that. Maybe the coverage is what that's why we are here today as well.
All the names.
Yeah.
Check off. Okay. All right. Thank you so much, Anthony. So there are a few people who have asked similar questions about how long does it take for a bond to mature. 1, 2, 3, 4 of you I've seen. Really, every bond has a different maturity date, and within any fund that holds bonds, they would have bought a number of different bonds, each with different maturity dates, just to get, so that you're getting interest at different times. And so there isn't only one bond that is sitting in M Fund, for example, or any of the other funds in the industry. It all depends on which ones they bought. If you look at a number of companies, Databank, we have a fund fact sheet that is available on our website. You can see it. And it will even tell you the top 5 bonds that the fund holds and the maturity date of those bonds. We do that. EDC Investments does that as well. So a number of companies do share what is in their fund. So that will give you an idea of how long it takes to mature. In fact, there were more of you with that question. So now let me go back to, so another question here says, how long does it take for a client who wants to withdraw money from M Fund? The question is, right now, it could take up to 2 weeks. That's the answer. Somebody is asking, can one have access to all of his or her investments at the market value? The answer is yes, but let's make sure that we're talking about the same thing. What that means is, let's say you have your amortized value is 10,000 and your market value is 8,000. You can have access to the full 8,000 today if you withdraw. You cannot have access to the 10,000 because that's no longer the market value. So I just want to make sure that we're talking about the same thing. Somebody is asking, does it affect all types of investments or only M Fund? It affects all mutual funds. So it would be, if it's Databank, M Fund, EPAC, B Fund, Eddy Fund, ARC Fund. But the difference is, because those funds don't have as much fixed income as M Fund, that's why you really feel it with M Fund, but it does exist in all of those. So now I will go back to Kojo and ask him a few questions. 1 second. So someone is asking, but I think Anthony answered this. They wanted to know how long before this would be over so that they don't see any deductions in their investments. But I think we've answered that one already. Somebody else is asking, does it mean that the whole fund could collapse if panic withdrawals continue, which will mean those who decide to remain will lose their funds, according to your answer from your question 2? This is directed specifically to you, Kojo. So one, the question is, could the fund collapse if panic withdrawals continue? And then I'll let you answer that one. And then answer this one too. It says, I heard you waive front load fee. Is it on all the funds or just M funds? So answer those.
Okay, so no, I don't think the fund can collapse, but actually if the way that the price difference between, and I think Anthony tried to explain, the way the price difference between the amortized value and the market value is, if we kept selling bonds to give people their amortized value, while those were staying in at market value, then the fund could collapse, because you are giving people a higher amount of money than the market value actually is. So it is like you go and sell. I was using calculators. You took money from somebody, went and sold a calculator, but at a loss. But you are still trying to give the person the money that you expected and not the loss. Then you will be collapsing the company. But in this case, we are trying to protect the fund, and that's what the SEC2 were trying to do, so that you sell the bond at the market value and you give the person the market value. But if we had continued with the way we were, you will notice that we were the last fund managers actually to implement the SEC's directive, because we're having a lot of back and forth. But if we had continued selling at a loss and trying to give an amortized value to the client, then we would be literally collapsing the fund. But the way we moved to the market value, then that is unlikely to happen. Front load is only for M fund right now. We're trying to sorry, till December 30th. Yeah, we are trying to not let the pain even be more. So we've decided to waive the front load for M fund for now, and shepherd all monies into very short-term dated securities for now, so that we can start building up the value of the fund again. So like we said, we'll do everything in the best interest of you and the company at large.
Thanks, Kojo. Okay, Anthony, I'm coming back to you. There's a question that Kojo has answered it earlier, but I think maybe it may be good to also have an answer from your side. So the question says to SEC, is the loss on investment realized at redemption or on holding the investment? I ask because my investment value has significantly been cut when I have not initiated any redemption request. Let me know if you need me to repeat it.
That's me. I've answered. Okay.
I know. I want SEC to also answer.
Okay.
Please,
Anthony.
Jillian, can you say that again?
Sure. Okay. So the client says, is the loss on investment realized at redemption or on holding the investment? Which I guess would mean if they see a drop in the balance today with the market value, is that a loss today, or is it when they redeem? Then they ask, the guy says, I ask because my investment value has been significantly cut when I have not initiated any redemption request. Thank you.
Okay, so if I understand the question clearly, what it means is that the investor is seeing the amortized value and then the market value. So I assume that the investor is talking about the difference between the amortized and then the market value as a loss situation. So you only crystallize, we use the term crystallize, meaning you realize the loss only at a point of sale. When you sell the investment, then you have actually realized the loss. But if you still keep the investment and you monitor progress over time, you realize that the amortized value and then the market value values are the same. I think it will be a good time to sell. Okay, so I hope that explains the question. If it is not, I can still come back. Thank you.
Okay, thanks, Anthony. So another question, and I think both you and Kojo can answer the question, but I'll start with you first. And the question, a client says, thanks for the clear explanation. My worry is if the economic situation worsens, isn't it the longer you stay on, the worse your calamity? Anthony. Okay, I was letting Anthony speak to that one. There are many questions for you after
I
this.
know. I know.
Anthony, are you there?
Yes, Zillian. So say the question again.
Okay, so the question is, if the economic situation worsens, will your calamity not be worse if you stay invested? Essentially is what he's asking.
Okay, so then I don't know which calamity is referred
the
to
calamity
here.
of
However, Gillian, I think that so we are talking about bonds here. Bonds, there's only volatility. I mean, there's a risk. The risk is only in the time you want to disinvest versus maturity date. Okay, so when these bonds mature, the expectation is that you have your full value. Okay, calamity, like I said, we do not know tomorrow, but let's assume that these bonds mature. I mean, we should be able to have the full value. I do not want to be negative, which I do not have any idea in terms of the calamity, unless, of course, the investor is able to give us an idea of a calamity that can befall us tomorrow. Gillian, you're muted.
Sorry, yes. I'll say, based on a lot of the comments that we've been getting directly from clients, I think the concern is we've been trying to encourage people to stay invested, to stay calm, and kind of let's ride out the storm, where the storm is people's values are reducing because bond prices are falling. So they're getting hit on both sides, where the amortized value in some cases is coming down because the funds are having to sell securities at a loss. So that's one thing where their amortized is being impacted. The second part of it is they now see the market value, which is also lower. And in some cases, some people, if they leave, would lose not only interest, but it could impact their principal. So that's kind of the calamity that the clients have been really coming to us with. And so his question is, in light of all of that, we're telling them to stay calm and stay, but if the economic situation worsens, won't it be worse for them? So that's the question that.
Okay, so I want to say that the calamity is investor driven. Okay, so it's more of the rush to sell. So that is also making fund manager to also sell the bonds before their maturity dates. Of course, once you're doing that, it affects even the amortized. The more you sell to make cash available to those making withdrawals, of course, it affects the amortized value versus the market value. And the more we are all dumping the bonds and nobody is willing to buy it, the few people who are willing to buy would call a price. Of course, once they call a price, then whatever price they call, because we are desperate to sell, we would agree to sell. Okay, so I think that these are investor driven. I think that when we withdrawals, taper off, the belief is that these things would normalize, would normalize, and we allow these bonds to mature. I think it's quite a straightforward. So that's why we're having this conversation, to be able to educate investors.
All right, thank you. Did you want to add anything?
No,
to
I
that
think
one?
he's
Okay.
done justice to it.
All right, Anthony, two more for you, and then I'll come back to Kojo. So one person is asking, what is the duration, sorry, what is the duration for this mark-to-market valuation? So that's one question. I'll actually ask you three, and you just answer all three. So one is duration for mark-to-market valuation approach. The second question is, how does the haircut affect tier 2 and tier 3 investments? I think they're looking at their pensions. And then the third question is, are investments of unit holders insured? So if you can take those three, then Kojo, I'll come to you.
Jillian, can you say the last question again?
The third one was, are investments of unit holders insured? Okay, so first is duration of the mark-to-market valuation. Second is, how does haircuts affect tier 2 and tier 3 investments? And third is insurance for investments of unit holders.
Okay, so duration, I want to believe that the duration here is asking whether the mark-to-market valuation methodology would be used for a period of time. I think that it has come to stay in the sense that, however, I think that we also stated in the directive that the SEC may revise, amend, vary, or revoke the directive. So the SEC, remember, the SEC has a surveillance rule. Is scouting the market and to ensure that the integrity of the market is protected and investors as well protected. So of course, if so, that caveat is put there so that if there's the need for the SEC to revise or amend or to revoke the directive, they will be able to do so. So that is that for the first question. In terms of a haircut and its effect on pension, I think that we have no idea what the haircut is all about. The haircut, we haven't had haircut conversation today, so I am limited to talk about haircut on pensions because nobody knows what the haircut is all about or will be. Okay, so that's that for the second question. The third one, which is the insurance for the mutual funds, I think the scheme particulars would detail out if any scheme is insured. I do not know which scheme in particular you are referring to, but
Anthony,
I mean, yeah.
In this case, they're looking at depositor insurance. It's similar to how Bank of Ghana would have a certain amount of insurance to protect depositors. The question really is there any protection for investors through SEC, the regulator on this side?
Not that I know of. I think I do not know. I do not have this information. I can check that and get back to investors on that.
Okay. All right. Thank you so much, Anthony. Let me come back to Kojo now. So there are a couple questions. The first is, someone has posted the article about government suspending interest payments for domestic bondholders and imposing a 30% haircut on foreign bonds. And they want to know whether it's true or not. So that's question one. The second.
If you do it back to back, I'll forget you know that.
Oh, but I have it. Okay, fine. Fine. Okay, I'll do it one at a time. Yes. Okay.
Okay, so I think Anthony also alluded to the fact that today here we are not really talking about the government's debt restructuring plan. what you are saying, we've all heard it in the media, but we don't have any official communication around that. So I'm not sure we are in a position to speak to the government's debt restructuring strategy. But what you allude to, we've all also heard through the media, and we are yet to get proper official communication so we know what to do.
All right, thank you. It's okay, we can leave the camera on you.
All right.
So the next question is it true that 30% will be charged whenever you make a withdrawal from your investment?
30% will be charged on what? I'm not sure.
So I'm not sure if they're linking it also to, but it's a different person who has asked.
It's probably to the Eurobond 30% thing. That I don't think is linked to our mutual fund conversation this afternoon.
Okay. Hang on. Another question is B fund and EPAC affected?
I think earlier on we did allude to the fact that yes, all are collective. The directive said for all collective investment schemes. The thing is that what is creating the situation we find ourselves in is that M-Fund has the highest value of fixed income securities or Government of Ghana securities in there. And for the first time, we are experiencing this depressed pricing in fixed income or Government of Ghana bonds. The others, like EPAC, is majority equities or shares, and we've always marked to market there. So we're used to that volatility already. But yes, it affects all collective investment schemes.
Okay. Next question is, what is the difference between M-Fund and EPAC now?
Difference in what pricing?
Well, volatility, because now there is apparent volatility in M-Fund. So
I think for this year, M-Fund is experiencing its highest level of volatility ever. We haven't seen this kind of volatility in M-Fund ever before. EPAC has experienced some volatility, but I think the M-Fund one right now is much steeper. At the moment, is much steeper than EPAC. But we're, like we've said since the beginning of the call, we're hoping that the market will correct itself and bond prices will stabilize.
okay. Next question is, now that the investments have been, okay, hold on. All right. So there are a number of questions that have popped up about the haircut policy from the government and when it will be implemented. We do not know.
No.
We are all waiting to find out, just like you are, what plans the government has and what the final decisions will be. So we really, no one knows at this point, and anything that you read in the news or you hear on the radio largely is speculation, because nothing has been officially communicated. Another question, this one seems to be all the way from China, says, what is Databank doing differently or out of the box to solve this problem? Because our money continues to reduce instead of gaining, even though I have reached maturity. So that's one question. What out of the box thing are you doing? And then I'll come to timing of the announcement. That's another question.
So I don't know how there's maturity. There's really no, and we've said it earlier on, there's really no maturity for collective investment schemes. So I'm not sure what product specifically you have, but if you bought a direct treasury bill, then that would have its own separate maturity and the conditions there. The directive does not affect that. What are we doing differently and out of the box? I think I did allude to the fact that at least for all new monies that are coming through, we're currently waiving the front load charge. And again, we are shepherding that all new money away from the current pot within M-Fund that is seeing all the volatility. So we are shepherding it away so that we can invest it in shorter dated securities, which are not experiencing the kind of steep discounts that we've been experiencing right now. I hope that helps.
Okay, and then the next is timing. Why didn't they get the notice earlier?
You know, with all, so the question, the question is, why didn't clients get the notice much earlier? I think what I would like to say, two things there. Like I said, we were having a lot of conversations with the regulator, the Securities and Exchange Commission, on how best to implement and deploy, because we believed that we had the largest customer base. But that said, when we finally decided when and how, we did send out the notice to all clients. But I understand, just like when we send out our annual general meeting notices and all, not everybody gets the notice at the same time, or even sometimes we get email addresses bouncing back and all. But apologies there if you didn't get the notice on time, but we did try to reach everybody as much as we could.
Thank you. And what I will add to what Kojo just said is that part of what we needed to do or make sure was done before we did the notice was just to make sure that the systems were even ready to a certain point to be able to give you the prices and show you the difference in value. If we had gone ahead and said to clients, well, we're complying with the directive, and so this is what is going to happen, but you check your balance and you can't see it, and when you do your withdrawal, you're hearing one thing, I think it would have likely created even more chaos and panic. So we paused to at least try and get the systems ready to a point. It's still not perfect yet. There are still, our mobile app doesn't show both balances yet. The USSD *6100 also does not show both balances yet, because those take a bit longer. But we wanted to at least make sure that clients would be able to see and have access to both balances before we officially rolled it out.
Yeah, let me add something. I'd also like to add that currently we are not using any new monies to be paying old the old deposits that are there. We need to protect all new monies that come in as much as possible. So we've had to also put all that strategy on hold and adopt a different strategy completely for new monies that are coming in, so that we give it as much protection as we can. So I don't know if some of you have already checked, but you will notice that under your M fund, you have a tier 2 showing if you have brought any new monies recently. So we've sort of created an M fund tier 2 where we are shepherding all the new money into, to ensure that it doesn't get mixed up in all this chaos that we are currently experiencing in the current M fund. Okay,
thank you. All right, so next questions, hold on. Okay, so someone is asking, he says, can you please assure us that M Fund will bounce back if I choose to stay? And to what extent has speculation and panic withdrawals contributed to the poor performance of M Fund? Kojo, I'll give you that one, and then we'll take more.
I think Anthony said that nobody knows what will happen tomorrow, but the fact that you don't know what will happen tomorrow doesn't mean that you should take your money and squander everything now, because then what happens if tomorrow comes? Then what do you do? The second part of the question was to what extent?
Yes. Sorry, to what extent? Hang on, sorry.
Yeah, sorry.
Okay, so the question was, can you please assure us if M Fund will bounce back if he chooses to stay? And then to what extent has speculation and panic withdrawals contributed to the performance?
So like, I think I've answered the first part, but to what extent has it? In our deliveries, both my delivery and the regulator's delivery, we were saying that because the withdrawals and the withdrawal requests are so high, that now the cash that even by law we were required to put aside to be meeting the redemption request ran out. Once that has run out, then what do you have to do? You have to go pick your underlying assets, go to the market to try and sell. Now, right now, because the prices are low and buyers are not many, the few buyers who are on the market are dictating the pace, just like any ordinary market, and telling you what they will give you, take it or leave it. Now, because people are also on our necks demanding their money, we just have no choice but then to sell. And when we sell and we've sold at a loss, then that loss has to come and hit the fund. And that is why you keep seeing the value of the fund dropping. So technically speaking, I know it's not practical, but technically speaking, if we all decided that, okay, guys, no more withdrawals, we'll just wait, nobody should withdraw, nobody, and monies mature, coupons come, it gives the fund manager then cash flow, liquidity to even reinvest in higher, shorter dated securities with a higher return. That improves the liquidity of the fund. I know it's not practical, but that is technically what we are saying, because then if nobody is withdrawing, then we are not forced to go and sell any bond to pass any loss through the fund. Then we are all stable and at par, waiting for the prices to improve. That is technically what is happening. Thank you very much for that question.
Okay, so you guys, you're coming with some very difficult questions. Darlene, I see that you say your question has been skipped. I am so sorry. So just repost it. I'll try and go back through and find it if I skipped over it. But I will continue with another one. So it says, all right, knowing how Ghana's economic performance knowing Ghana's economic performance over the years, things do not change easily. And the person puts growth in brackets, meaning that I guess we're not likely to see growth that quickly. So the question is, are we not causing more harm to ourselves if we keep our money at Databank? Since staying with the policy is at high risk as at now, are we not causing more harm to ourselves? Okay, what I'll do is let me start off, and then Kojo can jump in, and I'll even ask Anthony if he has anything to say. Maybe I will say it for the sake of everyone online, just so that we're very clear. This is not a Databank matter alone. This is an industry directive that every single fund company was asked to comply with. So if you, for example, take your money from Databank, if you go to another investment company, you will find the same thing. If you have money wherever, in any investment firm that you have money right now, we're all saying the same thing. That's why SEC is even here, because guys, at the end of the day, the directive came and we all had to comply, and we get it. It was in an effort to try and protect those who are staying in the fund. But don't make the mistake and think that this is just a Databank matter, because it really isn't. So, Coach, I don't know if you have anything to add. Anthony, if you have anything to add, come on screen, and then I'll call
okay,
out to
Gillian,
you.
I think you've already made a point that it is not the directive was not issued to Databank. It's not Databank specific. The directive was issued to operators, market operators, and then specific directive to all mutual funds. We have about 83 mutual funds in Ghana. Okay, so let's say 83 collective investment schemes, because even mutual funds, we have the unit trust schemes as well as the mutual fund schemes. So in total, the directive was issued to about 83 collective investment schemes. So it is not one operator specific. So regarding in terms of things would not normalize, like I said, the future, we do not know. Like as I'm sitting here today, I do not know what will happen to me tomorrow. But we are hoping for the better, making sure that we do all the things that are necessary so that tomorrow comes, we are able to live, to be able to have what we need to have. So basically, that's what I think I would add. Thank you, Julian.
Okay, thank you so much, Anthony. Don't go just yet. I have another question for you. So someone says, I do not understand the fairness when I have to lose part of my money if I have not decided to touch my investment during this difficult time. So I don't know what you can say to encourage this client.
Okay, so fairness here, I think that Kojo and I, we have illustrated the fairness in this already. So I think that you have not withdrawn your investment. What it means is that you have not realized if there is any loss arising from the amortized value and then the market value. So if you haven't taken the money, then you haven't realized it. So you haven't lost actually. So what we are saying is that the underlying assets of the fund is into government bonds. And then exiting government bonds or selling government bonds is not a good time at this point. So you would sell at a lower value. So I'm just rehashing the point we've already made. So it's not a good time. So you on paper you have seen a loss, but you haven't realized the loss. For all we know, by the time you want to actually take the money, the loss would have gone. I mean, so let's put this in the right context. Thank you.
Thank you, Anthony. Somebody wants to know what's the difference between mutual funds and bonds?
M-Fund.
Or M-Fund and bonds. Let me try and explain that this way. So M-Fund is a collective investment scheme. So what it is that different people all over bring their little monies here and there, and we put it all together. All right. So you have 50 CDs there. Somebody has 100 CDs there. Another person has 1,000 CDs there. You cannot go as an individual into the market to say you want to buy a 50 CD bond, 2-year bond, or a 200 CD 5-year bond.
Please mix it with tree. People are asking.
I'll do the tree bit. Thank you very much. So you can't do that. So because of that, you all come together and buy into M-Fund. So with your money, 500, 100, what you buy is you are giving certain number of units that we will multiply to the price to give you your value. Now, when the fund manager collects all that money, the fund manager then can go, because they've collected monies from all small from everybody and now has a large amount of money. They can then go into the market to buy a government of Ghana bond. So that is the separate underlying instrument that is for the M-Fund portfolio. So the bond is a product that the M-Fund has gone and bought, if you get what I mean. And earlier on, we did say that M-Fund then can buy a 1-year bond, it can buy a 2-year bond, it needs to mix it a bit so that it can get interest at different times, it can get maturity at different times to meet whatever requests or returns that we expect. I mean, that's how best I can try and explain it at this moment. But if you want further, maybe along the line we'll go. But let me try and speak some tree generally to what we've been discussing all this while. Now, ebi a tree in so meka me de ebi abrofo kakra bebem, but me mia menina maka tree in kwa. Nti ne on say Eko ye company ya ye we ye wo obi a ohwe so man unse o te company a ken se ye nya obi a obehwe ahwe se bibia wo ye no enamra kwan so bibia wo ye trodo de o ka se wo de amanfo sika na wo gigi no de beye won no ye from Securities and Exchange Commission won no mo hwe ye so na ne tine se be bosum ba kuni ne de ane na oche ena wo modern hihye ba se na ya valuation kra ntwi se na ya ye ebo na mo beto ye emfa na se na ya ye hihye de ebo ne ba no esese ye insakra ye kakra wo na ne ba ne se insakra ne eba ne ena se na omde insakra ne ba ne se nioma na ye koto modi musika ne ba de koto no ne ba yen se ne bo no na abafom ye nti ma me mfa ne se ebia me yen kodwem kakra na yen mfa ne se wodi sika ama me sika na odi ma me maka cho se me koto ntos kakra meto jene kakra meto nkroma kakra na media esie na edru baby a ne bo no kosro na nti de bia me ka cho se o me de tomatoes nkroma ne ejeni na abom no sika ni na sese no mfaso abaso bia 5 cedis ochina ye hwe ya mfaso abaso 1 cedi abeka ho ye na ochi another 2 cedis so abeka ho nti de bia oba obisa se o na Databank nti sika na me de ma mo ka se mo de koto sese no ni na basket no kenten na nioma no gum no ne boy sen na maka achiro na sena eya ebo no ye no no insisan kakra ba mu na eba ne se sena ye no afi de kenten na mikita na nkroma ne ntos ne jene no wo mu no ne bo no aba form in fact ebi wo ho a aba form chain ebo na me turn no first nti ube hu say sometimes obi to me tomatoes to ho say oh be 3 weeks time by all means tomatoes bo be cost and ma ton no menya ho mfa so but amba ne sa ne ye ne say ne bo no eba from chain say na me to tomatoes no cry nti e ka bae nti e ka ne bae no ne na e wo ne say se oba na afa de chinchine ne chin wo se uhia sika na ode ma me se me fanko didwa me fanko tomatoes ni jene by all means me dia wo de wonte ase me nton na me fa sika ma me ton a ba be ka cho say eno me se o me koton ye de but ma bo ho ka nti se o ka se da me nton a me kwa koton ma boka me boka nso a e ka no wa na sesem de ma na emom na ye kan na say unya abotre se na ye no edwam enye tomato bo aba form kra dodo nti nyabotre na ken ke tomato bo no ene je ne nkuma no ne bo no beba so na eba so na afi de menya ton a na unsa aka unfa so no but se o ka se o se na ade na ye no Ghana de ekofom na me o chimchim mensa na me koton dia me nya choice bia na me de me ya ne se meton na maka che o se anyway de yakoboka nti asem na ewo ho no na amanfo ebisa se nti ebe den na ade nti na okay me de ye miensa na ye de sika ne brew na sika na ye de brew no o asimesi na o mia se koton me de minka se koton na ade nti na me nso affect me ne e o ne se anka e na me wo sika kakra da baby anka simesi ba ya enyi se mekwa akoton tomato ana jene ana nkroma no na mede ni sika ama ne dia anka no de affect obi anka yin na pepepe sa nanso sika na mede to nchen no esimesi ba ya obentin so ba ya nti sika na ye de to nchen sa anka obi hia bibi a ye de be ma no sika na anya asa nti sese no wo ba ke o pese unso unsaka osika because won dim say esimesi ni obentia abeje won de maka cho say na ayen ese me kodwem na me koton na enen de se na ayen ne bo na ba form dodo scratch chain bo na aye toy no nti me ton yi e kana me de ba me feel say me mia mani abo asema esi aye kanina ni tree no tofa and I me pese me de tu edwama me hope say tree kakra na amaka no ato asopem. Jillian, you have no clue.
No. Anthony, would you like to add anything in tree too? Okay.
Anthony, if you speak tree, maybe you can help.
Unless,
But now Naomi Simpson should be able to speak tree.
Unless of course you want me to say it in a way, but I think that I'll ask Naomi to say a few words
in tree.
Okay,
yeah,
perfect.
maybe Naomi can try.
Yeah.
So Naomi, can we hear you and see you?
Okay, she's not coming.
Okay, so we're hoping that Naomi from the SEC will be able to give us a few words in tree. Okay, I see her taking her seat. Before she speaks, just to let you know, we will share the recording after the fact for those who had to drop off or those who were unable to attend, so that you can share. The second thing is we are likely to do another session next week because we maxed out the 1,000 participants, and so we will try and see if we can set up another session next week for people who are unable to attend. In 2 weeks, we also have the AGMs for the mutual funds, and that will be another opportunity for you to join and ask questions. So over the next couple of weeks, there will be several opportunities for you to join. Naomi, welcome. And let us hear what you have to say too. Thank you.
Okay. Inti niya ye kanyina my colleague Anthony any omo ye show so Databank omo reps no a cheche asie bia niya kan say emra ye wo mu no any niya e koso ninti Securities and Exchange Commission nya ehihya ye de aba no sene ye say ebebo ye nyina ye ho ban aban adwumadi ode ahye ye nsa no nya opesi ye ne say ye hwe ye industry yi so ye hwe investor bi obi ode ni sika beba say ode ba be kra ye industry yi mu obe invest we industry no ye bebo omu nyina ho ban investor protection any industry nankasa so see ebe hwe say integrity of the industry china would usika ba ubejia di say ye bebo ho ban inti ne ye de sa nhihye ato ho globally bebia amayama nyina would usika kra baby a ekosro eba fom nye ye kan say emra ye wo mu yi emra ekofom ye fan system no ekofom inti ye encourage si nyina ye nya abotre na mo obi anji meka emeji ni sika senka bibia ye okay kwa na so obi adwane beji ni sika system ni ntimi enkura ye mu yi nia emre na ye duru ye nya abotre ye ntwen kopim say bibia ben hyehyɛ so ne ye kan say se wunhie sika na nya abotre na emre ni ntwem ye nyina ye be film ye gidi say Ghana ni industry no besa afa ne ntoma pa efra se ne ye mpanifo eka no ye damase.
Thank you so much, Naomi. I can tell it's not easy, but I think it has helped. And one person has said, well done, Kojo, for the tree explanation, but you didn't add the part of deposit and withdrawal. And she says, I mean, I guess how the price will affect. So I guess the question is, will it affect both deposits and withdrawals? So if you can just touch that in tree as well, because I think we've dealt with it. Let me just see. Okay. All right. So
okay, so if I get the question, I mean, first thing, if I get the question, it's what happens to withdrawals and deposits right now. And in English, we did say that withdrawals will be at mark to market. Deposits, yes, will be at market, but we are deciding to shepherd. Inti ni awon se ni asema onu akun bisa ne se nti say no obeyi ni sika na bo ben ni yede ni sika na be ma no na odi sika foforo so ba bo ben na yede ni sika foforo no se ni ebe ye ni sika foforo no ne awon se o ba be yi sika ne dia bo na edwem ye kodwem a ye benya sika no one ebo na ye benya wodwem na no ana ye de be ye beton ye de usika na ma ye mfa ma o sene na e bia ye nida so no but nia edwem for e de ma ye na no ana ye de be ma na mmom usika foforo a o de ba ne de wo be kai a emfa no hoi ka o ba ye free bibi front load a free na copim at least afi be ko ewie ne de sa front load no ye free ho because na eno no yete be 1% bi a ye de ye nyoma bi ewo ejumam ha ye de be sesi nyoma but eno no se na ye free ho kra nti udi usika ne ba sa front load ni ye free ho ne etoso mienu no so se wo de ba ye mfa nkoto se bi o ye nka ne se emfa ndada nim ene ne bo na ehwihwi ekosoro ba form ekoba form no na emu no ye de bekwa akoto bebe fufro ye nte front load no eno nso ye mfa nkoto ye mfa nse aban krata emutwipi ye de beto krata ebe mature inimenimi ha ya na yetumi ehu se ne bo no entumi nkosoro ba form basa na ye de amamo anya gidie ewo emfan no mu bi because yenim se mugidie na eswate because of ne ekoso no but ya adwen se sika foforo bi ebebe bia ye de beko bibi foforo na eno no ne maturity na se emre a eso a sika no emre beso no eno yetia ena mfaso no nso ewo soro kakra sa na ya adwen se ye be.
Thank you. Another question that I will ask you to answer in tree, because we've answered it in English already. So perhaps maybe it would be good for some to hear the answer in another language. So it says, I think most of us understand that the mark-to-market valuation is necessary, and we understand that. But my question is, seeing as we are still seeing consistent reductions in our amortized value, even without making any withdrawals, would it not be better to cut our losses and withdraw the monies instead of keeping it in the fund and be losing money daily anyway? Would we not end up losing more if the reductions continue?
Say no. Ma bomodin me hu bonde se me chreche mu se ye na ye adwin se ye beba beji sika whether ne bo na ba fomo emba fomo aka se enemre mum de aban krata na ye na ekita no ne bo na ba fom nti enye emre pase ye beton no na but se ye na ye da so ba se me ejimi dia ene na mum mayen any option bia say ye be kwa koton aban krata na ya koton amamu no na ye de musika amamu na ye ton aban krata ye boka na kana ye bo no fund ni mu an ye de befa nti ne bo no ba na be ba fom na nka ye na ye gina ho say okay to say sana ye no mo bia nkoka say minim say enye possible so by all means ube here sika bia would be to your fees and now be ubi bia na we need us but me fan say anka ye na ye adwen say ye nko nkwaji sika bia ye nko na inti sa no data ma mo hwe ehu hia se mo bekwa koton mo aban krata na mo kita no na mo de aboka ansa na mo tuan obi anya abotre obi anjira o na ye ntwen ne bo no sign baso na afedie wo munya faso ana se mature wie na afede omutumi to krata afofra eno inimenima ha be mature na ye na enya homfos na aka se oh by all means ne bo ne be san akofom intermediate me ejimi sika preko to cut my loss chese me mpese ekano am ye bo no be san abo ne kano mo na majimi sika Yeah, me catch it, me conform, me can say, okay, Mate. Na mom no, sika na waje no. Kai who say, enye data bank hape, ena asemi ya AC atoyen. Ena Anthony Kai say, 83 mutual funds and a collective investment schemes na Ghana ha. Inti baby a ode beko bia, asema atoyen na ato bia. Inti mom no, unya abotre na otwen na yehwe na ne bon sign page na fe de ye na ye niji. And yes, I can say, so do sika no so na e bia won pass bi na person de kosha. And also who danger or who risk ho no what time sika na obi hu say akwa we ne wa be yi sika say ni say nti yen di nechi yen tata no ne enko ni fie. And also e hu nsem pii e wo ho. Nti ade ne de saa na e be sere obi a say yen nya abotre na yen hwe se na de anhyehyɛ aban de betudwa na yen hu ye ho ano a na yanya gidie se ne bo no ebe pagya na bibia asan ato din.
Thank you.
Why?
Because you're well done. I didn't understand a thing, but it's okay. From the comments, I can see that people are understanding. So someone is asking, why can't you move our existing M fund investment into the tier 2? Perhaps you can answer that one.
Okay.
Okay.
In English or
in
both?
both. I think
okay.
For the rest.
So the question is, why can't we move the existing tier 1 into tier 2? Fantastic question. However, we can only do that. Fund managers, correct me if I get it wrong. If we all have the patience for the instrument to mature, because when the instrument matures, government gives you the cash. Then you have the luxury to go and reinvest it in a shorter dated paper, even into the tier 2. But if you don't give me the luxury and the time for the paper to mature, for me to get the money, and you are demanding your withdrawal, then you don't give me that option to be able to convert. So it's not like government has failed to pay us, but it's not yet time. And once it's not yet time, you force me to sell. You don't give me the luxury to wait for it to mature. So if you all had waited for it to mature, then I have cash in my hand to flip it, then maybe into tier 2. Into the other say, only I could be say, me can say no sana emfa and I say ye wo emienu sika foforo e ba bia no ye nhye da mfa nto de ewo mu sese ya na ne bo na hwihwihwi na ewo mu a ye de kɔ akoto de friend say tier 2 num na eno no yetumi de ato aban krata enimeni mi ha ya ebeso ye mfa ne say ne mre beso an ebeso na yetumi nya ho mfa so no. Now, so mu ejina ye plano a da mu ka say o me pemsika dia eno no mu mayen enya ehum mre na ehia no anka de ewo ho no ne mre so aso a abaya de sika na mayan ansa na ye de akoto eho no nti se mu amayen sa mre ne dia na che se mu achechire yensa ato ye chi se chinchi ye mfa musika amamo eno de mu ye sa na mu mayen any option be done say you beko akoton ni aboka na e kan ye na aboy sana ete.
All right. Okay. So we are almost at the end of our time. We said we would end at 4. There's a question about how soon will the recording be shared. We will try our hardest to see if we can have it shared by tomorrow. If not, certainly by the end of the week, it will be shared. Somebody is asking, I have an old M Fund account. I want to make a deposit into the account. Will my new deposit be set aside and treated separately from the money in my old account? Kojo, would you like to answer
the question again?
Okay, so the question is, they want to put more money in the M Fund.
Yeah.
And they just want to know whether if they make a deposit, will the new deposit be set aside and treated separately from the money in the old account? So it's the tier 1, tier 2 thing. Yeah. And then somebody wants to know if they can move M Fund to EPAC. If so. How?
Yeah, so yes, the plan we have, or what we are doing, is all new monies that come, all shepherded to tier 2. No new money is being put into tier 1 right now because of the current volatility that we're experiencing that we've never experienced before. So we do not want to mix the monies, so that if you are, those of you who have Eddy Fund on the call, it is the same principle and that we have in Eddy Fund that we are trying to apply to M Fund. Same principle. So if you have Eddy Fund, you know that with Eddy Fund, we have tier 1 and tier 2. And when your statement comes, you see it separately, tier 1, tier 2. If you want to make a withdrawal request, it is treated separately. You will tell us whether you want to withdraw from tier 1 or tier 2. That's how we do it. So yes, if you want to flip from M Fund to EPAC, it is possible. However, let me warn, however, this, in my view, is not the time to be doing that. This is not the time to crystallize your loss in M Fund to go into probably a more volatile mutual fund as EPAC, where it's equities. And as for equities, you never know how it will behave. So it's entirely up to you. But if I'm advising, I'll still advise you to stay calm, stay invested. Let's watch how things go. Let's see what policies come up with the government's negotiations, and then we will all have a clear path as to what exactly we do.
All right. Thank you. All right. Let me just, in the interest of time, I think I will take 3 last questions. Someone is asking, will it be sent to our emails, the recording? Yes, it will. And that's not one of the questions. That won't count. All right. So okay, so the question is, I'm just trying to find one that we haven't already answered. Okay, so someone is asking, is it possible to hold all withdrawals till maturity? I am not sure if you're asking about that as an individual, or you are asking whether the fund should not do anything until the bonds mature. If you are asking as an individual, again, there is no maturity date for M Fund, but what you can do is, if you hold on to your investment, in time, the market will recover, and this big gap that you see between the amortized value and the market value, it should begin to close. So the suggestion is, or the recommendation is, try and hold as long as you can. Okay, Kojo.
Yeah.
Let's take. Okay, so our question says, according to you, are you ready?
Yes, I'm listening.
According to you, the fall further means any fund manager who is having to sell bonds before their actual maturity date to meet withdrawal requests will incur a loss at the time of sale, as it will be done at current market prices.
Right.
So the person says, I never expressed interest in selling, so why am I incurring losses? I should be incurring losses when, or I think he wants to say, I should not be incurring losses when I am selling, or I should be incurring losses, sorry, when I am selling, not when my investment is intact. So just to summarize the question.
I get it.
Yeah, he didn't want to sell, so why is he feeling the pain of people who are selling?
I share the concern, and I perfectly understand, and I think we've been trying to address that situation. What we keep saying is that under normal circumstances, the law provides that we keep a certain percentage of all our holdings in cash, so as to meet withdrawal requests, so that we are not forced to go selling securities or assets at a loss, or I mean, in some even cases, you can even sell at a premium. What is happening now is that the cash that we are even required to hold to meet the withdrawal request has run out. because clients have panicked, and clients maybe have misunderstood the situation, and the whole uncertainty within the economy is happening. If we then still have people continuing to withdraw, and this is where the SEC is suggesting that they are protecting investors. Now, if people then continue to say, I still want my money, and we are to pay those people at the face value when the market is actually below, then those who are staying are completely even being cheated. However, even those of us who have stayed and those of us who have not taken money out, because the fund manager is now having to sell the securities at a loss, first of all, that loss has to be run through the entire portfolio. It cannot be run just on that individual. So that's the first step. The second step then is the individual who is then leaving leaves at an even much lower price than you who are staying, at. So the portfolio drops from, let's say, 2 cedis to 1 cedi 50 pesos. Yes, all of us still within, because Mr. A is insisting on leaving, we suffer a loss, but Mr. A leaving then leaves at a further discount, not at 1.5, but probably at 1. That is what is happening. But yeah, as for the loss in the entire fund, for those of us who have stayed and decided not to go out, just like any equities portfolio or anything or any other portfolio, it's just that over the years, we have rarely experienced a situation where the price of the bonds or the assets we hold have dropped so dramatically. That is why we are feeling what we are feeling. But the person leaving is still leaving at a lower rate. Now, Niobisa and say, ono a ote ho onye na adwen say o obeyi ni sika. Inti ade inti na obi foforo aye na adwen say o obeyi ni sika na ono no mom no. Ono so kana onu akwa obeyi sika no bono ono so kana bi. Na ne o ne say, ne me kan say ye na ye wo ho na nka aban krataa na yekita no nka obi amba se oba abeji ne sika na nka sika kakra ye de ato ho nchen de bia ye de sika nka ye de sika kakra to nchen se o ebia obi ho kire ne kakra na opese obe a ye de sa sika no bi na ebe man na sa sika no because ankofo aba bro so chen se na nka dada ye hu na free a ye share fund asi ye hu sa nipa o mo baji sika saada. Inti no, they all say, sena amanfo aba pin sika na yede to nchen kakra no eno nasa ama esese afede ye koton ban krata na yekita no ye koton ne ye bo hoka na ye boka ne wi a ye na eka no bi bekan nanso onuako na ono ankasa pese oyi ne sika no ekono obesa bo eka ne mo inti na me eka ne say anka ye mfa ne say ye na ade ne ye 2 cedis, but because of maintain pese chinchine ne chi o pese oji ne sika no ye koton aban krata na ye na ye kita no ye nya 1 cedi 50 pesos inti eno na esese ye de fa ma eka obia nanso ono o pese oyi ne sika no kono ye de ne de na ma na nkasa ono no obenya ne be 1 cedi no dia ti ne wo ho no.
All right. Thank you. So someone is asking, if I wait for my investment to mature, say 91 days, will I get my capital and margins? So just to clarify, the investments that were affected by this directive were mutual funds, not treasury bills. So if you have treasury bills or you have bonds, whenever those mature, you will get your principal and you will get any interest that was paid. So it does not affect treasury bills at all. And so what I will do is just, okay, so I see someone saying he has asked 4 questions and not even one has been addressed.
Wow.
Anthony, I have not, like, there are so many questions, and I am hoping that everybody realizes that we can't possibly get to all. I would have hoped that we would have addressed enough of the questions to answer the most pressing ones. If there's any question that you have that really, it's still a burning question and you think we haven't addressed it at all, then what I will say is just put it in the chat one more time. Forgive me. Other than that, what we will do is after the meeting, we will still go through the questions that came in and try and answer them so that we still address as many of the questions as possible, even if we were not able to read it out here. So at this point, I think we'll wrap it up here for today. I will ask, I think I'll ask Anthony to first come on and just give any final words. I will ask then Naomi to also do the same in treat. Then I'll ask Kojo to come and give any final words. Then I'll come back on. But as I said, we will look at having another one of these next week. We will communicate the date. And then we will also have the AGMs for the mutual funds coming up on December 13th and 14th. So that's 2 weeks from now. And again, you will have the opportunity to register, come on. The board members will also be there so you can ask questions again. So I'm sorry that we couldn't answer every single question that came in. We had hundreds of them coming in. But Anthony, I'll turn it over to you to just kind of say any final words, and then you can let Naomi come on as well. Thank you.
Okay, Gillian, I think that it's a good conversation today. So it's good opportunity to explain the directives as issued by the SEC. I would also add that the SEC is here to protect investors. I think that is a core mandate, and to promote the orderly growth and development of an efficient, fairness, and transparent securities market in which investors and the integrity of the market are protected. I think that these are the core areas on which the SEC issued the directive. And so I think that on top of that, the SEC also issued frequently asked questions, which is on our website. I think that the education is ongoing. We have done a bit of it, and we'll continue to do that so that investors will be able to understand what their investment, how their investment is faring or is doing. I will only add, lastly, that it is not a good time to sell government bonds because of the ratings and those rating agencies actually. So of course it's not a good time to sell, and those securities are actually underlie the funds that we have. So if we think we do not need money as investors, I think that we should stay invested. Let us not panic to say we're going for our money. I think it is even the best time to even invest more, because of course, when bond prices are low, it is the best time to buy, to take advantage of that, to buy more, so that when market corrects, you are able to make more money. So of course, fund managers should be given the opportunity to be able to take advantage of buying those bonds that are priced very low currently. I think that's what I would say. And thanks for the opportunity to explain the directive. So that I will ask Naomi to wrap it up. Thank you.
Thank you, Anthony.
Thank you, Gillian. So, Nia, Miniana Kayan, your patron is say Securities and Exchange Commission, Ejumakua bind the SIPO, essay, industry, investments, yesha sono. Nia ye say a bo. Obi odini sika beba CM crowd was industry, ye bo, or mo buying, and ye bo, Ejumaku ni na ho buying. Intin she share, yet ya to one and your data banking kwa. Uko any other mutual fund bia almost so beka sa same way na at your office you be affect obia ye tisu bio se won hia se ubeyi wusika na nia wo ya ne se because what say sika no ekofon nti wu yi a ye stress nya abotre na ma sika no en share data bank na any other mutual fund se nyame ya adom na se bibia eya nhihye so a market no besa adani bi ena ye nyina ye hu beto yen nya yesa ka ne se ukoye website a ye de nkrata yi sa nhihye so yi ya tro ye de ato o ebe ma wate ase ene enti a ye yesa ya sa de imwisai ene anu imuaye ato ho frequently asked questions ye de ato ho sa wonti bibia se a ukọ ho a echeche ase nti ye nyina ye nya abotre niambo ye industry ye ho ban ye damase.
Thank you so much, Naomi. Okay, so I'll turn it over to Kojo for the final, any closing remarks that he has to say, and then we'll say a closing prayer by Emma and go.
So thank you very much, everybody. Thank you very much, all our very cherished, valued clients, for the questions, very insightful. Actually, a lot of the questions are giving us more ideas on how best to handle the situation in which we are. We are extremely grateful for the confidence you've still had in us. And we hope and pray that you will be our ambassadors, and then you'll be out there to also continue the education that it is we have started. I really, really appreciate. I'll also like to thank Anthony, the SEC actually, and Anthony and Naomi, and for supporting us and for joining us on this educative platform. My also thanks goes to the production team behind the scenes trying to get all this working. I am very, very grateful. We hope we've been able to at least educate you, even if we haven't allayed all the fears, but we've educated you, you understand it better, you understand what's going on better, so that we can all be in this together and come out of it together. Tini, I want to say, sem ne tiawa ne sem pese me damu na ase obiara biara ofa amre ka so beba betie na wesua nsem ekoso no yie na wate wonyanya no na enye se yese obi se na ode beye edwuma no na emom no ne ayaya ka ewe yenum nya wo mo hwe yen so no SCC fo no so ne o ma ba beka na mu na amate ase yie se be ya mo so mo bekọ ho ochina mu nuanom mo yerenom ne mo manam ne mo be chirechire mo yie na mo so mo aka bi amaye ma wo mate ase se ne ekoso yi ne nti a ekoso na ye na ye ogidi se emre enche bibia eba be san aye boko bioma ma ye na ye da mo ase pa because anka enyamo a anka ye enyamo anka ye ni ha ti mo amunti na ye wo ha mo amunti bibia ni a mo de mo friend mo bi sign mo obi anya mo nhihye no mo nya abotre kakra na mo nya gidie se enye enemre mu na ye babaji esika mom kra enye enemre sise na ye un se sika no mom ni hwia de be de a obenya abotre na ya hwe enim na bibia sign ai medam asepa. In fact man kana meboa medo bia ase because anka nyamo a enye ni ha ti ogidi se bibia beto di enche bia medam ase.
Okay. Thank you, Kojo. Okay, so Emma, if you can say the closing prayer, and while you get ready to do that, I've seen a number of comments come in, and thank you guys for also just being patient enough to ask your questions and wait for the answers. And those that we did not get to, we will try and get to them after, and we will share the recording. So Emma, please go ahead.
Okay, shall we? Thank you so much for a fruitful and a successful section. We thank you for our clients, we thank you for our leaders, and we thank you for our regulators. We pray be more peaceful to all stakeholders. So at the end, we shall all wait patiently to see our investment grow to your glory. This we pray through Christ our Lord.
Amen. Emma, your voice was breaking, but thank you. And once again, we will share the recording. Our goal is to try and share the recording by tomorrow. And so we'll try and work towards that. We will also work on doing another one of these sessions because we know it was only limited to 1,000 participants, so we couldn't get everyone. And then, as I said, we'll communicate the date for that. And then we also have the AGM coming up. We'll communicate the dates for that too. So thank you to everyone. Anthony and Naomi, thank you. The fund managers, Edna, Deborah, thank you, because you were answering questions in the background as well. So thank you very much, everyone, and continue to reach out to us by email or phone if you still have not gotten a question answered. Thank you. Have a good day.